Today is Thursday, October 26, 2017. US stock market recap. Well, yesterday we had a pretty interesting session, whereas we had, from the open, we had selling pressure through most of the day, and the actual S&P hit, interesting enough, its low point on this wick. Hit very similar to a low point. If I just circle that, it makes it a bit easier. There as well. So as we can see with yesterday's candle, the sellers weren't able to maintain the selling pressure, and I think it was during the afternoon session the buyers stepped up once again and pushed it up to a level where the S&P didn't close down that much. So, once again we're seeing for whatever reason on the S&P, the sellers cannot maintain the selling pressure, and the buyers come in and chase this market back up again, which is, it's getting to a point of, I don't know, I want to say ridiculous, but there's a lot of talk amongst traders and industry analysts and so forth that the S&P and the Dow futures, not Dow futures, Dow 30 index, and the Nasdaq hasn't had not even a 5% pullback or a decent correction for close to almost 2 years or something, which is quite unheard of. I think it's the longest on record. So, in saying that, looking at what may lie ahead during the US session, once again, will be driven by earnings. But we have to be mindful that depending on what happens in the bond market as well, if money comes out of the bond market and bonds start to sell off, we may see money flow back into the S&P, and we still might get a bounce back higher. So even though yesterday I did note on my monthly chart that there was a important time cycle count, well, there's actually two important time cycle counts which we got a hit. So if I just switch to the monthly, we got a dead on hit on that 45 angle, which is time and price is squared on the 45. So it did prove that time cycle as an important inflection point. Whether it remains to be seen that if it can hold, or if we're going to see buyers step up again and continue to grind these markets higher, we'll just have to wait and see what today's session presents itself. But in my own analysis, I still think it's too risky to look at going short this market just yet, or even holding a short for a longer term. You can short it on intraday charts using your own risk reward analysis. But until we see a meaningful sell down, I think we just have to play it as it is, that the buyers still look pretty strong in this market. So that's my my market recap for the S&P 500 index.